Hey everybody, it's me, the Einstein of Wall St from the balcony at the New York Stock Exchange. Quarter for 250,000, 250,000, 3 A's. Take them. A quarter, a half, 100,000 up. This is episode 9,875 of What the Heck's Going On? Einstein and Ives coming to you live from the New York Stock Exchange. We couldn't be at a more perfect time and place in space here today on Monday, right? Mid-March. Latter part of March, the market is nothing but green today. The only thing that are down is gold, coming off record highs, obviously flight to safety while we were selling off, and the VIX down from 26 at the peak of the sell-off a few weeks ago, down in the 16, 17 range. Let's talk about last week for a minute. Of course, I'm joined by my man, Dan Ives, the master technician, better than anyone on earth. So let's talk a minute. We had February 19th, locked in a record high in the market for the short term, okay? And then we suddenly had this spiral down, which lasted 4 weeks. I know if I were to ask most people how long that pain was lasting, because everybody felt the pain. Their 401ks became 301ks. Everybody was fearful. Do I sell now? What do I do? Everything looks terrible. Why didn't I sell before the inauguration? I mean, shoulda, woulda, coulda was all over the tape. And so it's like, so we have, if I were to say to you, how long did that pain, that dark cloud last? People would say, oh God, I feel like I've been in it for months. It was literally 3.5 weeks, right? From peak to trough of February 19th down to the short-term low that we're seeing that we just said probably is a short-term year low, which we just experienced recently, which we are already climbing out of. So last week, we started to see a turnaround on a Friday ago when, the narrative stopped being a constant barrage by the White House talking about nothing but tariffs and a lot of indecisiveness. We're going to kick it down the road. We're going to be aggressive. We're going to be fast. All kinds of, like a nothing burger in a way, because net, it was just posturing, at best, right? And so the market sort of finally read it and they go, oh, wait a minute, we're getting fooled here. We're being played a fool because nothing's changed. Nothing's fundamentally changed, yet the stock market is off 10, 12, 14, 15% in correction mode, bull territory, right? And why? The silver lining is that something that can go down so quickly and so fast and so aggressively, down double-digit percentages, can go way back up just as quickly. That's the silver lining of this whole story. But that was the beginning of the turnaround. Then Monday, we had a little bit of a follow-through. Tuesday was a little weaker. Nobody knew what to do, thinking about what was going to come on Wednesday. Wednesday was the Fed meeting. 99% chance of no interest rate cuts. I was hoping and manifesting a secret, that it was going to be a surprise cut and that the market was going to go up 2,000 points. That did not happen. The silver lining of the Fed meeting, which always happens in the news conference by Jay Powell, you should all be watching at 2:30. The number's one thing. 2:30 is where the rubber meets the road. And what he said is he thinks everybody's fear about what the tariffs are going to bring is overdone. And that if there is going to be a major economic impact of the tariffs, whoever and wherever and how much and whatever is already baked into the market, meaning that sell-off we had is probably the worst it's going to get. And that's when the market turned around. It was 247. On Wednesday, and the market rallied 94 handles on the S&P, from dark red to screaming green, right? We sold off a little bit off that end of that day. We pulled in about 30 handles, but the aggressiveness and the determination and the clarity of the rally got locked in, and it was amazing. Truth Social, Mr. Trump, at the same time that Jay Powell said, we're probably going to have 2 cuts this year. I'm not going to do this cut now because I don't feel it's necessary or warranted. Mr. Trump was aggressively talking at Mr. Powell saying, don't you see where the market's been in the last 3 weeks? You should be cutting rates. And that kind of signified to me that that's what this was. It was almost like a setup, right? Nothing against the president. He's the one running the show. He's the new sheriff in town. It's all good. However, what was happening was that anxiety he was pulling the market down almost to fulfill that prophecy, which he wanted, which was to cut rates, right? So I'm going to toss it to you.
That's like an awesome summary, I think, even of like the last 3 weeks, because the fears that tariffs going to lead to like inflation.
Recession, they were using
lead to
the
recession,
R word.
The R word. Can we hit a technical recession? Other countries saying like American exceptionalism, we'll call it, is gone.
It's gone.
But the reality is like, and me and you always talk about this, you got to take away the noise and understand, like, this is all a game of high stakes poker. The tariffs were never going to be that draconian. It's to ultimately get Canada, Mexico, reciprocal countries,
Right.
China, to the negotiation table.
That's right.
Street seeing through this and realizing that this could basically be a growth hiccup, or we'll call it a pullback,
Right.
but it's not going to stop this tech bull market. And I continue to believe, like, tech stocks will make new all-time highs in 2025.
So yeah, think about that. So, you know, look, I know you may think that we are the forever bulls and we're always looking at the cup half full, not half empty, but that's not always the case, because if Dan felt, right, and I defer to Dan because I know I look like Einstein, I'm not that friggin' smart. This guy is smart. He would not be saying what he says when he talks about the second inning of a 9-inning game, or 4 p.m., 8 p.m. at a party that goes till 3 in the morning in this industrial, amazing tech revolution in AI that we're in the middle of, or in the first innings of, right? And that even when we've seen these pullbacks, these sell-off, these consolidations, we're not talking crashes, we're not talking recessions, that we're not even in that ballpark, right? But he says it with conviction for a reason.
We're in year 3 of a 10-year build-out. I mean, no, I'm saying that's just the reality.
That's
and
where
like,
we are.
DeepSeek, everything, the reality is, look at DeepSeek. I mean, everything that's happened in Singapore, now you've realized that those were next-gen NVIDIA hardware.
Right.
And you add 2 commas to the 6 million. That's what they spent.
Right.
So what that's importantly does is it takes away that view. CapEx overbuild. Where's the AI use cases? But look what's happening now. Oracle, Palantir, Salesforce. You're seeing day by day more and more enterprise companies are saying this is where enterprise spend is.
Right.
And we think it's up to 10 to 12% IT budgets.
Okay.
In terms of when I look at AI.
Palantir 6% up today
Look,
already on day one of this rebound rally.
But it goes back to the whole, if you believe, and that's what we spend all of our time doing,
Right.
that we're in year 3 of a 10-year build-out.
Right.
You could have these bums geopolitical,
Right.
you know, and macro.
Or even
and
just
interest
chatter,
rate-
or even sort of, it's almost like espionage. I mean, it's just a story. It's chatter.
But if you believe that China tech or Europe markets are going to outperform U.S. tech, where the AI trade is in the U.S.,
Right.
that's, to me, that's just a fool's game. I'm not saying that there's not going to be trading opportunities here and there, but it's our view. That's why, like, this is a tech tape where NASDAQ will still be up 15, 18, 20% for the year, despite starting in the hole down 15%.
So, you know, when you talk to somebody like Dan, who has experience, who's seen bull markets, who's seen bear markets, who knows how to take away the noise, right? That's what a lot of this is. You know, whether it's coming out of the White House or it's coming out of mainstream media, you know, whether it's coming out of DeepSeek or it's coming out of, you know, those people who are, you know, messing with the game, right? You cannot be swayed by that. It's not like a seagull in a hurricane situation here. You cannot be swayed every time. This is part of what happens. A bump in the road, a pebble in your shoe. You've got to get over that. And we always say this, if nothing is fundamentally changed in the story about individual names and stocks, well, then you're not here to be selling them. You're here to be buying them, because once again, it's not a chance to sell, it's an opportunity to buy.
And it's like what we've talked about with Tesla over the last week and a half, like tough time in Tesla, given political you know, blowback in terms of Musk, Doge, brand, crisis. But the reality is that, like, that's another one. Like, been here, 6 times we've had Tesla sell off 50% peak to trough.
Right.
So the point is, like, this is definitely a white knuckle period.
Right.
But I believe autonomous and robotics will essentially be owned by NVIDIA and Tesla.
Right.
So if you believe that, this is not a time, just because of the panic and it feels bad.
Right.
I view it as almost an uncomfortable time for growth investors.
Right.
But uncomfortable is not bad.
No.
It sometimes means those are some of the best opportunities.
Well, so sometimes uncomfortable is a time of growth. So, there's my man, David Meltzer, who's the movie Jerry Maguire has written about him. He was a sports management guru. He's the guy who came up with the idea of sponsorship and endorsement in the sports world. He says when that feeling that you get when you wake up in the morning and you have some things that you got to get done in your day and you have butterflies in your stomach, right? And you feel this lack of confidence that you can't do it. It's not about the inability to do it. Those butterflies in your stomach mean you're about to do some epic shit. Excuse my language. But that's the same thing. Uncomfortability can be two things. It can be if the reality is that things are breaking down and things are not good and things have changed, that's one way. But otherwise, it's just that uncomfortability before. It's like when you want to grow a plant, you disturb the earth before it grows. This is a little bit of that disruption.
In chaos creates the opportunities.
Yes. Yeah, and that's what's so amazing. So where are we now? We are now on Monday, third week of March. We are already starting to bounce back. Not to say, don't come back at us in a couple of weeks and go, Guy, you told me it was never going to be another down day. That's not what we're saying. We're saying that this feels like, with the experience that we both have, today is the anniversary, my 40th year. Today, March 23rd, is the first day I came to Wall Street, 40 years ago. I've been here for a long time. I came here, I was 4 years old. I was a child prodigy trader. I was this big, right? It was unbelievable. And
they called you Baby Einstein.
They called me Baby Lil Einstein. Lil Einstein.
Little, yeah.
Right? Little mini Einstein. Anyway, experience tells us that things are starting to change. You can feel it. When the markets go down in that fast and furious way, right, then you have a sort of a feeling that this has been caused by a lot of chatter and noise and a lot of catastrophism. When a market has a day like today where it opens up and stays up all day, when it had so many opportunities to break down and sell off and didn't, that means that there is support in the market. What we used to call in the old days, there's a bid in the market. Right, that's how you know that there's support. When you build a foundation, it's like what we do with IPOs. You got to know where the bodies are buried. When you're building a building correctly, right, and you put the mortar in and the bricks in, and you use good quality stuff, then you're building a building with a foundation. That's what I think we're. I think we're in the beginning stage of building this back. Because trust me, it was a very painful 3 or 4 weeks. And as I said, if you ask most people, they would have said, oh, no way, that was only 3 weeks. I felt like I've been in this dark cloud for a while.
But the reality is that I'd argue almost to go higher, you had to go lower. You had to flush out the weekends. Yeah. The nervousness is there. Yeah. But I think it creates the opportunities because now we kind of go into like 1Q earnings season. Right. Just big tech, and I believe they double down, maintain CapEx plans, AI trajectory, is that accelerating? Right. As that starts to happen, and then remember, you're going to get into 2 to 3 Fed cuts second half of the year. Right. You're going to have this uncertainty on tariffs, but the reality is like, it will take some stabilization, but then I think market rips higher. So let's think about this for a second, that people have so we saw that at the end. We talked through this period at the end of 2024 as we were escalating to the point where it looked like we were going to close out the year at the high. 218 trading days, 58 record closes in 2024. The last Fed meeting, the Fed said, you know what? We were looking at 4 cuts in 25, 4 in 26. We're making it 2 because the economy is doing better than we thought, and the market broke down and sold off 1,000 points that day. And that kind of knocked the market off its beam, and we sort of really hadn't recovered from that, really, because that's sort of like, oh, wow, people have gotten emotionally coupled that the only way markets can go up is if we cut rates. At the end of the day, cutting rates is expending a bullet from a gun that you should only use when you need it. We have limited bullets, and you don't go to a fight, right, and not shoot. You've got to be very, very thoughtful when you shoot that bullet because you only have a couple of bullets. And the Fed has guided a soft landing.
Right.
And the reality is that they can be patient.
Right.
You cut too early, that could be a bad move.
Correct. And what you saw here is that Mr. Powell, even though it seemed like if he was not holding his ground, saying that I know what the last 3 weeks were, it was almost a bit of a setup, right? We forced the market down to those levels by a lot of breaking of confidence, a lot of chatter and catastrophism around the tariff state. If you would have come to us in the beginning and said, okay, there are going to be tariffs and this is the way it's going to go down, well, the market wouldn't have responded that way. So you needed to create that anxiety for the market to sell off.
But think about it. Second week in January, how many rate cuts are priced in this year?
Right.
1, but many thought 0.
Right.
8 weeks later, 2 to 3.
Correct.
Job done.
Job done. Exactly.
Right?
And
I mean, job done.
And job done, and the outcome of that is being seen here today, because Wednesday they did not cut rates, even though the market sold off 15% and went in correction mode. And today is the response. It's like, oh, you were right. We don't need a cut to go higher. What's going to make us higher is clarity on tariffs, a little bit of a back off from that narrative, and the bottom line is getting the buyers back in the market. That's how we go higher.
And the bears have called 25 of the last 2, corrections.
Right.
I mean, the point is that's the other problem, right? Like, it's like the bears are always saying, "This is it.
Right.
This is time."
I told you so. I told you so.
But it's like, 2 times they were right of the 25 times they called it, and I just continue to focus on. Where's the spending? We're living in year 3 of it's going to be a 10-year build out for AI. And that's a fourth industrial, autonomous, robotics. We are just starting the real life Jetsons.
So let's talk for a minute. I understand that I spoke to JD and he said that Jensen did an interview with Kramer. And did you see it? Did you hear it?
Yep.
And he said it was an amazing interview. What everyone thinks of Jim Cramer, and I love Jim Cramer.
That was an unbelievable.
It was an unbelievable, and what I heard was that something you said already a while ago, which was the DeepSeek story was actually necessary, and it actually brings positivity to the. If you bring competition to the game, it's only, once again, disruption causes growth
and cheaper models.
Right.
LLM models.
Right.
Cause more companies, more consumers to go down the AI path.
Right.
That's bullish.
Yeah.
But so and also, as Jensen talked about in that interview, and he talked about GTC, it's not just about ChatGPT,
right?
Enterprise AI, autonomous, robotics. In other words, physical AI in terms of where everything's heading.
Right.
And I think that's one where it's very easy in these conferences to just be like, oh, the stock's down, it must have been bet.
Right.
Sometimes you have to take a step back and be like, what he's essentially laying out the future for technology.
Right. And also, you know what, you'll see, let's think back for a minute, because we did have the day that the DeepSeek, look, when markets go up with fury, I can go back and give you a scenario with GameStop when it went from 2 to 483 and back down. When stocks go up for a huge reason, they'll also go down for no reason. They'll also go down for no reason. You're going to see when DeepSeek came along and laid out that story, which now we're finding out is about 80% incorrect, and the other 20% is actually a positive part of the story, right? Then $258 billion, let's look at the whole story, was taken out of NVIDIA in one day, right? And we were able to recoup that. You have to realize that when you have these sell-offs that are fast and furious and very short term, the buy side comes in. It's like you're getting more customers. People, it's like we talked about, the 7 pullbacks, consolidations, and sell-offs we had in 2024 were all opportunities, right? If you go back, first quarter of 2024, the best quarter since 2019, NVIDIA went from 108 in 23 to 924 in 24. During April, the pullback took it to 724. Yeah. Once again, an opportunity. Yeah, right? It went back to 924. Earnings came out in June. It went up to 1,200 and then split. These pullbacks, it is a sign of a healthy market. It also brings new people into the game. People who I don't want to pay the high. If today's high is tomorrow's low, right? Well, then we're in the right game.
But also it goes back to if a restaurant, if people are not going to the restaurant because there's food poisoning,
right?
Food's not good,
right?
Whatever. But then sometimes they're not going to the restaurant because it's always so crowded, and they don't want to wait,
right?
The reality is, you just have to understand you're going to go through these, but it's not selling off for fundamental, and this is the most important thing,
Right.
for fundamental reasons that show negative downturn on the horizon.
Right.
AI is not real spending.
Right,
It's
right.
the opposite.
Right, exactly. And we saw that, and we've talked about that. At the end of the day, that's probably the most significant thing we always talk about is when markets roll over and they pull back and they consolidate and they sell off, and you're in a stock and nothing is fundamentally changed in that particular stock, that is not a reason to sell. Right? But that's not the way the psychology of markets work. Everybody freaks out and they throw the baby out with the bathwater. We've seen that happen time and time again. So let's just get, you've given me so much time and I really appreciate it. I really want us just to take an overlook. We're here in the third week of March. We're now, I want to be able to look, what I was trying to wonder is, if you and I are sitting in 3 or 4 months and we're looking back at this time, will this be a time where we should have sold because there's more darkness on the horizon? Or was this once again, this was opportunity number one of the first quarter of 2025?
I think bottom for the year is starting to now be put in terms of in 1Q. I mean,
Right.
my view is like you could have some sort of, it's Trump scares in terms of shots across the bow. But I believe this is actually the start of the market now starting to become disciplined and more used to Trump 2.0,
Right?
and not sort of viewing it as maybe the Armageddon that I think the market was kind of baking in the last few weeks.
People have short memories. We had forgotten what happened. If you go back to Trump 1.0, the same thing happened. There was a lot of chatter, a lot of noise. The market freaked. As I told you, I can go back to that day, the first time at Davos when he said,
Yep.
China and tariffs, market sold off 1,400 points. By the end of the day, we had rallied and we closed up 1,400. We actually had a 2,800 point reversal, right? And that's where the significance lies, and that's the most important thing. So we're in a good spot now. If we look back at this, you're saying we're etching in the low of the year, right?
I think lows for the year are basically in the rearview mirror. Like, I believe now we start to build higher as fundamental news comes in,
Right.
more clarity on tariffs. You know, eventually peace in Ukraine, some sort of truce there.
That, the global,
You know,
the global
you know,
thing's a big thing. Yeah.
U.S. and China potentially coming to the table in this summer. You know, in terms of some sort of Jinping and Trump meeting.
Right.
The point is, like, I'm not saying we're not going to have some other panics.
Right.
And I don't think a recession happens. I mean, maybe you get like very close to like some sort of negative GDP,
Right.
you know, in 1Q, but it's probably close to zero. And then I think you have positive in 2Q.
It is important, and we've talked about it before too, that if we're in a new world, post-COVID world, you cannot use some of the terms that we've grown up with are no longer relevant. Depression, recession, right? Bullish market, bearish market. If you can go from a bear market at noon to a bull market by 4 o'clock, those terms are no longer relevant. And I think you just brought it up there. Some of these things are no longer relevant when you look at them in the rear view mirror, right? The way things used to be. And so I think it's really important. You've painted a picture here that the market is already in a very short period of time already gotten some discipline around Mr. Trump's the way he style, exactly, the way his style. We're already used to it, and that's a good thing, right? Because he's the guy he's the new sheriff in town, and we have to deal with what he does. But we don't need to be tossed around like a seagull in a hurricane. We need to accept where the markets are going to go. This is the new market. This is the new rules.
Yep.
Okay, and we're going to edge ourselves forward. And the way the market acted today was, I'm so glad we're doing this today, because today was a spectacular example of the beginning of building back a foundation for the next bull market. Okay, we don't need to say anything about that. The best dressed man on Wall Street. I got to be out west in Huntington Beach with Mr. Ives at the Wedbush conference, and that was just an honor for me.
It was unbelievable.
And to see that all the satellite offices that are part of Wedbush, who are there to try and listen to Dan, and so that they can go back to their customers and explain to them in the midst of all this fear and catastrophism, that things are going to be okay was an amazing thing for me, because this is all, we're all learning. We're learning from each other. We're learning styles, and we're learning just the level of growth. And we've never seen that. You know, often we can go back and say, oh, I've seen that movie. I've seen that movie. I don't know if we've seen, this is a new movie, right? New movie, new rules, new terminology. And I think it's really important. You're talking about recession. A recession is two consecutive, what's the word? Negative GDP with a lot of other components to it. We're nowhere even near that. Yeah. So why would we even bring that up unless to scare people off? And I don't get that. A lot of mainstream media, nothing against them, but when they catastrophize markets and situations, it doesn't do it. That's why, look, that's why Dan is the master at this, because it's all about making this accessible and so that we can explain to you what's really going on and break it down, right? And we hope you come to this party. It's 8 p.m. The party's going until 4 a.m. and you have no idea what the future's going to bring. It is going to be amazing, and that's all I got to say about that. Dan Ives, Einstein and Ives.
Thank you.
This is the man. Trade like Einstein, Money News Network. Giddy up.